Traders, in this video, I'm going to be teaching you guys essentially how to maximize your green trades, minimize the red trades. So I'm trading at CPRO. Some of you have been trading over there as well, where you get 6-to-1 leverage, $100 minimum deposit, and all the shorts you really could ask for. Now, today actually tested me a little bit. Now, for those that have been following the journey, watching the live streams back, or trading with me in the mornings, you guys know that my quota on the day was relatively small for a few months. It took me a while to realize this for some reason. That's why having a trading coach like me is good, because if you guys send me your charts or your trades, I can help you out. I can be objective and tell you what I see, what you can work on, etc., etc. So do that. everydaytrading@gmail.com. I love helping you guys out. Well, that small quota was essentially, it was creating a ceiling of resistance on my account, and then my red days, I'd fight them, have bigger red days, try to dig myself out of a hole and dig myself deeper in the hole. We just flipped the script, guys, and the account's turning around now. So what we've done is we put a max loss on the account, $50, so I can lose no more than $50. And on the green days, I am essentially not giving myself a quota. I'm trading the signals as they come. Now, I'm not suggesting you guys over trade. What I'm suggesting is if you see a high probability setup, a high expected value on a ticker, what you do is you take it rather than say, oh, I'm sitting green on the day, I'm not going to trade anymore. I've used the analogy. It's like, man, imagine the casino. They win one-handed blackjack and they're like, we're shutting the casino down. Why would they do that? They know over time their edge is going to provide them more money, regardless if they lose the next hand or not. So I've had to develop a mindset that thinks a little differently, which you have to do when you trade, right? So I've developed a mindset that says, Kevin, even if you're green on the day and you give back your green, it's okay because we know the probabilities are in your favor over time. I'm not suggesting you overtrade because what I'm really assuming is you have an edge. If you have an edge, why would you stop trading? If you have the probabilities aligned on your side, why would you stop? It doesn't make sense. So that's something I've learned with a small account, which I'm very happy I focused on, because otherwise a month ago, I would have stopped trading when I was up barely anything. I would have been like, I'm just taking the green. And there's a reason for that. Now, there's 4 fears in trading. I want you guys to identify yours right now. They are being wrong, losing money, the fear of missing out, and leaving money on the table. Now, my fears that I struggle with the most are being wrong and losing money. So how does that fear play out? Well, when I'm green on the day, I don't want to be wrong. I would literally rather take baby green than be wrong because I want to win. So what are the implications of that? The implications are you're not going to have a big green day, Kevin. You can have an irrationally large size green day relative to your account if you don't think like that. If you think, I'm taking my edge when it presents itself, regardless of how much I'm up on the day. Now, granted, the risk, we're rigid with the rules, flexible with the profit expectations. So the risk, we're going to have max at $50, but on the winning days, we're going to keep it going, baby. We're going to take the signals as they present themselves and keep trading. So I want to show you guys today's trades, and it doesn't take a lot to start padding the wallet and making some money. Right now, I'm realized 128 and unrealized some leftovers. I can get into leftovers as well here in a little bit. My only real red trade was this DLTR dollar trade. They took some of my dollars today. So minus $15 there. And then the rest is just like 28, 17, 30. These are leftovers. The rest of these, minus 3, minus 5, minus 1, are leftover positions that curled back around and break even. I usually am always doing leftovers. So SMR worked out, took some off, and then took the rest off for additionally larger profits. MKDW, I'm doing that right now where, okay, look, I took 17 off there, then 30 on the leftovers there, and I'm doing the same right now. I took another short here at resistance, and I'm working it down and leaving leftovers on it. Leftovers essentially is an amount that you kind of gamble with. So you take the high probability setup, and my struggle has always been letting my winners run. So what I do is, and I know you guys, we all hate the word gamble when it comes to trading because we're really not, but I teach with leftover positions, just try not to care about them. Because right now I'm up $17 on I don't care about this position, and it could turn into 30 or 40 and pad the wallet and get us up to over 150 on the day. So what I mean by that is that we saw a pattern here. MKDW, this thing, 17 cents up to $1.20. I teach the magic 20-cent area all the time. Fast moves up through the whole dollar. Liquidity grabs the 20-cent magic area. Usually is a high a day number on tickers. Holds up as resistance. Well, this started forming a descending triangle. And if you don't want to catch it front side, this is a really easy pattern to recognize and trade it on the backside, meaning it sets as high and then it starts getting lower and lower highs, squeezing tighter to a support line. And what you can do is short it on a pop up to resistance, risking high day 120 or up and over the top resistance line. You short into this, it sells, it cracks under that bottom support, it takes out a ton of stop orders, it halts down, it opens up, goes down to 63 cents. What I like to do with leftovers, meaning it's like 25% of your position, 50% of your position. It's just a remaining part of your shares. You've capitalized on the high probability setup, taken some money off the table. Now what you're doing with leftovers is if it wants to continue fading, or if you're long on something and wants to continue stair-stepping up or grinding higher, what you're doing is you're setting either a trail, really just a trail position, but the main thing is you set your stop at your break-even price, so you know you're not going red on those remaining shares. So they're either making you more money or you're stopping out of them break even. I'm telling you guys this because I want you to learn from my struggles. So my struggle has been not letting my winners run, and that's partly why. You may be fine with it. You may do well with letting your winners run. I traditionally haven't, so I like to leave leftovers to work for me and try to have a position like whatever happens, happens. Because the ones that work, like if this thing just fades off all throughout the day down to 50 cents, that's money in the bank, baby. Shawty, what you think? When I was up about $70 on the day, I was thinking, I don't know, let's just lock in the green. I love being green. Let's just take it and have a good rest of the day. Now, why was I saying that? Because I have a fear of being wrong and losing money. Those two fears. So I saw this pattern developing and I almost didn't take it, but thanks to Mr. Isaiah in the chat, he said, would you be more pissed if you lost money on it or if you missed the move? And probably if I missed the move. I thought about that in the moment. He said that, I shorted it, and then down she went. Like literally clockwork right when he said it. And that hit home because I would have been so pissed off not taking it because I have a fear of losing money, being wrong. Also, it cost, that was my only locate today, but it cost for 200 shares, $4.80 to locate that. And if it would have climbed higher and taken me out, you're going red on it and you're paying for locates. It's just an aggravating thing. And I still would have been green all day, but not this much. So those fears almost kept me from not trading this. Additionally, we could have an even larger green day than today. This may not even be a big green day relative to your trading account. I'm talking percentages. I'm trading a small account, so you can have a very large green day percentage-wise if you take your edge when it presents itself. I think it's important to mitigate the L's in the red days because red days are inevitable. They're coming because if you're like me, I like to dig. When you should just throw the shovel away, I like to dig. But assuming you have an edge, why wouldn't you continue to trade? So I considered all that. I took the setup, beautiful euphoric move into descending triangle. CPRO, this is Capital Markets Elite Group, their proprietary platform. Loving it over here so far, essentially because I love shorting and I can short anything. Now, granted, some of the small caps, you do have to pay for the locates. Opportunity cost, like I said. Think about it like this. Sometimes it's more expensive to not trade it or not locate it. Think about that for a little bit. But traders, that is how you maximize your green days. A little lesson today. I want you guys to learn from my mistakes. I'm always happy to help you guys out. So my mistakes have been that. If this is helpful for you guys, hit that like button. Hit the subscribe button. I'm here to help you guys out. I want you to be a part of this journey. No matter what we do with the account, I want you guys to learn. I'm very focused on helping you guys out. I know firsthand how difficult trading is. And sometimes you just need somebody to slap you in the face and tell you what you're doing. Why couldn't I have understood this for the first few months of the year? But that's why we start small, right? We fix our trading errors small, and it's only up from there. I mean, the saying goes, the stock market makes poor people rich people poor. So any questions you guys have, let me know. Email everydaytrading@gmail.com or throw them in the comment section below. I think the green team was all green today. You guys in the live chat did very well. Excellent work. I'll leave you guys with this. There's two important things you got to focus on when trading. A, if you don't learn to accept the risk, you're not going to be a consistent, profitable trader. Someone like myself that's been watching these things forever, I have a lot of confidence. But if you let your confidence, aka your ego, trade for you, it's going to be disastrous on your account because anything can happen. Anything can happen in the stock world. We saw that today, essentially. Because what I see out there are a lot of traders, newer traders, that try to just eliminate the risk entirely by adding a lot of different indicators. They think that the more they do, the less inherent risk there is per trade. Can't think like that. Every trade inherently has risk, always does, always will. Accept it. Take your edge, embrace the risk, accept the results. Traders, love you guys. We will see you guys first thing tomorrow.